Hello everyone, this is Corey at TradeThatSwing.com. This is the stock market update for October 9th. So markets have October 9th, should be October 8th. And so markets have just closed on October 8th for the weekend. And so this will be the outlook going forward. There were a few things that had come up. So in this video, we're going to look at just the market health indicators, what they're saying, and then also a few things about how this affects my trading, and yeah, a few questions that came up through the week. So the market health indicators, I look at the four indexes. We have the NASDAQ, S&P 500, NYSE Composite, and Russell 2000, and we can see that they are moving in short-term downtrends right now, the NASDAQ and S&P 500. And these ones are kind of moving in triangle patterns. The NASDAQ's kind of moving sideways after a drop to the bottom of the range. So nothing real bullish here. So what that basically means is I'm, based on this, going to reserve my capital for better times. So I'm not going to deploy a lot of it swing trading. And also the market health indicators basically giving us the same thing. These are the number of stocks above their 50-day moving average, and we can see we are below 50%. Swing trading, much easier when these indicators are up here. And once they're down here, we tend to get a little bit more dicey, choppy trading, or we're in a downtrend. So right now, not in a great area for these indicators. We have basically most stocks are in short-term downtrends below their 50-day moving average. I do not use 50-day moving averages in my actual strategies. It's just a way to assess how many stocks are kind of moving up and how many stocks are moving down over about a 50-day period, which, often is about, I'm taking swing trades that last, several days to a couple months sometimes. So a 50-day moving average is a pretty good assessment of, what is the kind of short to medium term trend in most of these stocks. And right now, most of them are down. They're below the 50-day moving average. Volume, not really important right now. This is up volume divided by total volume. I really get interested when I see levels down near 0.1 or 10% of all volume is up volume, or when I see 90% of all volume is up volume. And we don't have any of those levels right now. This top line's the 90, and this was a really low one. This was down around 10% this day way back here, but we haven't had any of those really low or really high days recently. This one is just measuring the daily percentage movements, so it's just a rate of change of each price bar. Drops of 2% in a single day are definitely a warning sign. It lets us know that selling is escalating, and in and of itself, it's just something to be combined with all these other indicators. But we got one of those on September 28th. I think it was this big bar right here. And we haven't recovered above that level yet. So I'm still considering this kind of, even though we've leveled off and it's stabilized a bit, still calling this one a bit of a red flag. This one's a bit of a mixed signal at the moment, because we made a lower swing low here on the S&P 500 here to here. And from there to here on the NYSE advanced decline line, we actually made a bit of a higher swing low. So that was a bit of a positive divergence, saying the price isn't looking too bad, or it's a weak sell-off. But more recently, the price has gone up, and this indicator hasn't. So it's not really confirming the uptrend. It's not really confirming the downtrend. To me, that says it's just kind of saying we're in for some chop. Maybe. We'll see how it plays out. But either way, I don't predict what the market's going to do. I just trade based on this information. Just tells me, hey, it's not great out there. Don't put a lot of your capital into play. So let's talk a little about that. Is there opportunities to put your money into play? And I talk about that a little bit down here. It's the daily chart. We're doing this analysis on the daily chart. So it's the daily chart that's showing trouble. On shorter time frames, you can have uptrends, intraday trends, uptrends that last a few days. So on a shorter time frame, we're kind of below that warning sign, and so you could potentially find trades on a shorter time frame, but you'd want to make sure that you actually have that skill set. I haven't discussed that much on this site, so you'd have to develop a strategy for that. You could use the same patterns I use, looking for shorter term patterns with the same type of setups, maybe on an hourly chart. But you're going to have to take some things into consideration, and I'm not going to, if you ask me for help, I might help you, but because you have to take a lot into account. How long are you going to hold those trades for? You now have opens and closes, and do you want to take a trade right before the close of a day? Do you want to take it only at the open? All of a sudden things change a little bit when you go from trading a daily chart to a shorter time frame. There's other things to consider. So you really have to kind of figure those things out for yourself and decide how you want to trade, the patterns that we use on the daily chart. How are you going to trade those and implement those on an hourly chart? So I'd leave that up to you if you want to do that, but I'm just saying that there is that option. You could trade a shorter time frame if you're really bored or something while the market's not great. And someone also asked me, what about trading a strong sector? Sure, right now energy's looking really good. We can see basically everything down for the most part over the last week. Well, financials a little bit, but over the last month, everything's pretty much down. Energy, the only thing that's up and doing really well. And we can just see energy. So yeah, while things are not looking so good on the overall front for the indexes, there is one sector that's holding up pretty good. So you could trade in some of the energy spaces. I used the normal scan that I always run, but I just added in a different, right at the bottom of that little box, you can see sector energy. And so I basically just added in the energy sector. This is for all exchanges, Amex, the Canadian Exchange, NASDAQ, NYSE, TSX, Toronto. So basically Canada and the US. I kept the volume, I think they're at 1 million, so that's fairly high. You could drop that a little bit. And these are some of the stocks that came up. So these are some of the stronger stocks out there right now in the energy sector. So you can see it's pretty much a straight run up recently for a lot of these, which means you're not going to find daily chart type patterns like what we talk about in the complete method stock swing trading course, because those are based on daily patterns that generally take sometimes months to form, or at least a month to form. So when we're having a really strong run up like this, you're not going to see it. You are going to have to drop down to an hourly if you were interested in trading this. I also point out that if you're going to do that, the same rules apply as when market conditions are bad. You're only going to want to use a little bit of your capital, because conditions are still not good for swing trading overall. Yes, there's a little niche out there in the market that's doing well. So if you want to capitalize on that, sure, use a little bit of your capital, potentially on a lower front time frame. But if conditions are weak, if those indexes keep selling off, everything eventually goes with it. Nothing's going to stand up against it for that long. So you're kind of trading that on borrowed time. That doesn't mean that it can't go up for another few days, a few weeks, but if those indexes keep dropping and everything else is selling off, eventually people realize, I want to take my profits out of those things that are doing well. I need that money. I got killed on everything else. So basically everything starts to roll over. So I view them as you're kind of trading on borrowed time. So only use a little bit of capital, and you're probably going to have to drop to a lower time frame, because you're not going to find, if something's just kind of running straight up and really strong, you're not going to find daily patterns. There's also, if this was a super boring time, it didn't really have to be. We still had trades that were open, and just because the market health indicators turned down quite a while ago, back in September, that doesn't mean excuse me, that there weren't trades still open. So we don't close our trades just because the market health indicators turn. We're basically hedging our bets. We have those trades that were doing really well, looked good at the time, and they could still hit our targets. Just because the indexes move down or whatever, the market health isn't looking so good, we want to give those trades a chance, because we're not going to be putting any more money into the market. So we've already saved ourselves from a big loss, basically. And if we have a few trades out there from before, they can still do well. So here's how basically all the ones that triggered have done since the last August 25th outlook. Had a really big win on MGRO. I made 14R. So that's basically risking 1% of your account. And so a 14R trade would mean you risk 1% to make 14%. So this was a 14% gain on the account. CELH plus 5.5%. This one's still open, INVE. It's up about just under 1R right now, or up 1% on the account. I'm not talking about how much the stock is up. I'm talking about how much the stock is up affects my account. If you don't understand how that works, how much stock to buy, how to position size when swing trading stocks, this explains everything about how position sizing works and how that affects the value in your account. So I would check that out. So yeah, that one's still open. NTLA, that was a loss. So we're risking 1% of our account, lost on that one. IKNX, this was a super quick gainer. Of basically happened the next day after the list was published, or a day after, plus 4R. FOMV, this one occurred a little bit after the list, if I recall correctly, and that one just ended up chopping around. V means TSX Ventures. This was a Canadian stock, and these are ones I did not take, but that would have, this is how they would have ended up. So I found these like a little bit odd maybe, or I just didn't take them for some reason. So this one's still open, plus 1.3R right now. It's come very close to a 3R target a few times. Urban 1 down 1R, pretty quick loss. This one a little bit odd pattern again, but if that had been taken, it would have been 1R. So even with these ones that I didn't end up taking and adding in those losses, still up 21.55% on the account since that August 25th list, which was the last swing trading list I published. And that basically stayed in effect until kind of early September there, about mid-September, when we started to see these decline below zero, and then, or below the 50% mark. And at that point, we've never really climbed above it. So I haven't published a list since then. So since going back from, kind of late August through now, when the indexes have basically moved up a little bit and then fell, just kind of following the signals and then avoiding everything since then, you still could have been up 21% just in the last month and a bit. Take out that big game, because I know some of you don't trade Canadian stocks, and still up about 5 to 7% while this was going on. Just by, kind of staying in those initial trades, because just because the indexes do this, as we're seeing with energy right now, stocks still can go up. We're trading strong stocks. They still have the potential to go up. This is one of the ones, still holding up really well. Entry point was back here, and doing really well. Let's see my chart. I haven't. And then what's another one? INVE. it's chopping around a little bit, but from that initial breakout, it's still holding up pretty well. Almost stopped out a couple times, but yeah, still holding up there. And a 3-to-1 reward to risk, got pretty close to that a couple times. Looking for a little bit more. I think I had my target, right around just under 22. Yeah, so right around there. So it's come close, but it's chopping sideways. It hasn't given any, hasn't stopped out. So overall, even though the market went lower after that watch list came out, it was still beneficial to hold those trades. So this hasn't been a dead time. In fact, it's been pretty good, and managed to increase the accounts double digits, and by over 20%, while not publishing watch lists, just basically kind of living off the trades that were taken before that market started to sell off, and after all the watch lists ended, because we started to move into this negative health scenario, which has basically kept us out for this entire decline. So there's that to keep in mind too, that this, just because the watch lists stop and I'm saying I'm not taking trades, does not mean there weren't trades from before when conditions were still good, and those still could be benefiting the account. So that's basically the market outlook for this week. So I am holding off right now just because the health's not so good. So until we start to see some higher swing highs in this, and we start to see these indicators move back up, and this one move back up, there's not much reason for me to get real aggressive here. Like I said, if you're bored a little bit, sure, trade energy on a lower time frame. Figure out your strategy for that, so that next time that happens, you'll be ready to go. Figure out how you're going to trade those patterns on the hourly chart, and because it's going to be a little different, and you're going to have to decide how long do you want that consolidation to be. On the daily chart, it's 3 days, because 3 days to me is important. 3 days says there's been not a lot of activity for 3 days. Does 3 hours hold the same significance? Absolutely not. A 3-hour consolidation, especially if it's during a lunch hour or something, who cares? The market's probably not going to move. So there's things it's not going to be a straight across, it worked on the daily chart, I can just use the exact same pattern on an hourly chart. You're going to need to look and make some adjustments if you decide to drop down to a lower time frame. But it is something that you could do and develop that skill set, so that when things are a little quieter, you do have something to trade. So I'll leave that for now. That is your market update for this week. Until next week, happy trading.